Environment like this, where we are getting fairly deep into the bull market, there's lots of uncertainty in the air. How do you go about picking the right stocks for your portfolio? Let's bring in Tyler Ellegard now for some perspective on that. He's a portfolio manager at Gradient Investments and one of our regular guests here on BNN Bloomberg. Tyler, great to see you. Thanks for your time.
Thanks for having me back. Glad to be here.
Has your philosophy around individual companies to invest in right now been influenced by that macro story to a certain degree?
You know, I would go back to really what your prior guest had brought up, and that was the consumer sentiment numbers that came out last week. It seems like the market has been starting to price some of that in, especially with what's been happening with the U.S. government here and the DOGE team and potential layoffs. And I think that's really what's leading those numbers lower on consumer spending could go down, right, if you have more of those layoffs. So we have to take that into consideration when we're thinking about our stocks and where we want to put our assets, right? And so that's, to answer your question, yes, we do have to consider everything that's going on, but I think a large part of what's happening right now in the market is what your prior guest had brought up with consumer sentiment.
Okay, well, Tyler, you came to the table today with 3 different investment ideas. They're all in different sectors, so I want to take some time to go through them. One is Dexcom, which for those who suffer from diabetes has in some cases been a game changer, a lifesaver. And give us a sense on what it is about their business that appeals to you at this stage in the market cycle.
Well, if we think back a year, their second quarter of last year, they basically blew up their entire sales team and realigned their teams with different channels. And so there's a lot of concern with the relationship side of it, because on the healthcare side, and you're going into doctors' offices, the relationship is a big thing when working with some of these doctors and working on diabetes with patients. And so when that happened, their sales, the growth projections after that, when you don't have those relationships, can take a heavy hit, and they certainly did, because we didn't see much growth out of this company that was valued for growth, and so the stock fell quite rapidly. We started to see it come back a little bit. I think that's because we started to see the sales team kind of get their feet rolling a little bit, and we're starting to see some of that execution that we were promised about a year ago. And the other part of this that I think is important for Dexcom and keeping up with competitors and keeping them at the top of the space is they're testing a 15-day sensor right now, and the expectation is for it to launch at the end of this year, which I think will be a big growth driver for this company, because right now a 10-day sensor versus a 15-day sensor is a very big deal in the world of diabetes. And so if they can get that product launched at high quality and be better than most of their competitors, I think that's going to be a big value add for new patient additions for Dexcom.
Okay, you also talked about the uncertainty from the government cuts in Washington. One name that you are looking at right now is Raytheon, huge player in defense. What is it about the profile of that business that maybe could perform well going forward, maybe avoid some of this uncertainty in Washington?
Well, a lot of the headlines have been around, cutting defense spending, cutting government spending in general. But we saw this week and last week already that the Senate is working on another border bill to raise border funds, but it also included defense budget increase or defense spending increase. And at the same time, you have the House of Representatives here in the U.S. working on basically a full package for tax cuts, spending cuts. But the caveat with that is they had increased defense spending and border security. So yes, headlines have said that we're seeing, defense spending going down, but that's not the case at this point. And so from a company like Raytheon, who's positioned perfectly for defense and contracting with the U.S. government, that's really why we like these types of companies. And also, when you have the continued global uncertainty, whether it's geopolitical or ongoing wars, that uncertainty creates increased budgets, not just from the U.S. government, but I imagine it's going to start to raise budgets across the globe as well. And Raytheon doesn't just contract with the U.S., obviously. So Raytheon is well positioned for times like this. And quite frankly, I don't believe the U.S. really wants to lower defense spending. I don't know a time when we really ever have, and so it's a not a perfect look through for future revenue growth for a company like Raytheon, but it gives you a general sense of what their growth could be. Now they have to win the contracts, but Raytheon has done that in the past, and I think they'll continue to do so with their different segments that they play in.
All right, and your final idea today is Coca-Cola Femsa, so a big bottler tied to Mexico. Obviously, a lot of uncertainty surrounding Mexico and all this Washington worry right now. What is it about that business that you think might be overlooked?
Well, I think number one is the discount that it trades at to its bigger partner, Coca-Cola, right? So Coca-Cola trades at about 22 times next year's earnings. Coca-Cola Femsa trades at about 14 times. And that's a historically wide spread between those two. And so I think you can get multiple expansion here just from the catch-up trade on that. But from the fundamentals of the company, they reported a couple weeks ago, EBITDA came in 24% growth year over year, which was well above consensus estimates. So it's showing that their margins are holding up well in times of uncertainty. And then on top of that, volumes, were, I would say, generally as expected. But when you come to the pricing side, they have very strong pricing power in their regions. And then if you even want to take a little bit further deep dive into that, South America was a very bright spot for them. And so I think that driver will continue with the pricing power and the multiple expansion. And so I think you get a natural tailwind from potential volumes coming up with the pricing power and the multiple expansion.
Tyler, I really appreciate it. Always good to see you. Tyler Ellegard joining us from Gradient with some stock ideas for your portfolio.